Hi, I'm Keon, a senior research analyst with Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, January 29th. We'll start this week's report by taking a look at the market activity. The major equity indices finished down for the first fund flows trading week in 8, as the Dow Jones Industrial Average, S&P 500 Index, and the NASDAQ Composite Index retreated 1.6%, 1.5%, and 1.2% respectively. Prior to this week, the indices had appreciated 7 straight weeks, with the NASDAQ, S&P 500, and the Dow recording positive returns of 9.5%, 6.7%, and 5.6% during this time period. The indices suffered the lion's shares of the losses this week during 2 trading days, as global concerns over the coronavirus grew exponentially when it became apparent that China did not have the outbreak contained. In market news, the Federal Reserve announced that it had left its benchmark federal funds rate unchanged at its current policy meeting. The Fed also kept its policy outlook basically the same as it was from its previous meeting in December, which is that they are content to keep rates static while they assess the impact of last year's 3 rate cuts. We'll turn our attention back to fund flows now. We'll start by taking a look at the fund macro groups. For the week, money market funds and equity funds experienced net outflows of $11.6 billion and $4.2 billion respectively, while taxable bond funds and muni bond funds took in $4.7 billion and $1.7 million net new money. We'll now explore the changes in each one of these asset groups more closely. We'll start with the equity mutual fund group. The $4.2 billion net outflow for equity mutual funds was the group's 5th straight negative net flow. Domestic equity funds were accountable for all of this week's net outflows, as $4.4 billion left their coffers, while non-domestic equity funds took in around $250 million of net new money. Among the domestic equity peer groups, the largest net outflow belonged to large cap core funds, at $1.4 billion leave, while emerging market funds had a net inflow of just about $600 million to lead the non-domestic equity fund peer groups. We'll move on now to our equity ETF group. Equity ETFs had net outflows of $2.4 billion for the week. The largest individual net outflow among them belonged to the SPDR S&P 500 ETF and the iShares Russell 2000 ETF, which had $1.3 billion and $836 million leave respectively. The iShares Core MSCI EFA ETF took in the most net new money with an inflow of $1.6 billion. We'll move on now to our taxable bond fund groups, starting with the mutual fund side of things. Taxable bond mutual funds took in roughly $4.7 billion of net new money to run their streak of weekly net inflows to 4. The core plus bond funds and core bond funds peer groups paced the positive net flows for this asset group with increases of $1.6 and $1.3 billion respectively. We will move on now to taxable bond ETFs. This group had net outflows of $379 million last week. The largest individual net outflows belong to the iShares iBoxx Dollar High Yield Corporate Bond ETF and the SPDR Bloomberg Barclays High Yield Bond ETF, which saw $1.9 billion and $657 million leave respectively. The largest net inflow belonged to the iShares 7 to 10 year Treasury Bond ETF, which took in $670 million in net new money. We'll move on now to the Muni Bond Fund Group, which ran its streak of weekly net inflows to 56. This asset group had positive net flows of $1.7 billion for the week, led by the High Yield Muni Debt Funds and General Muni Debt Fund peer groups, which had net increases of $588 million and $539 million. Our last group to review is money market funds. Money market funds saw $11.6 billion leave their coffers. The majority of this asset group's peer groups saw money leave, with the largest net outflows being attributable to the institutional U.S. government money market funds and institutional U.S. Treasury money market fund peer groups, which both had approximately $4.7 billion of negative net flows. Conversely, money market instrument funds and institutional money market funds had net inflows of $1.6 billion and $761 million respectively. Well, that wraps up this week's report. If you'd like to take a look at the fund flows data for yourself, please go to our website, which is at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.